This emotion has destroyed more fortunes than bad luck. Not recession, not inflation, not a bad economy. Something much quieter. It doesn't show up on charts. It doesn't make headlines. But it decides when people buy, when they sell, and how much they lose. Fear. And right next to it, something just as dangerous. Greed. Most people think money is about math, numbers, percentages, logic. But the truth is, money is emotional, and emotions don't follow logic. You open your phone, your portfolio is down, not a little, a lot. Red numbers everywhere. -3%, -7%, -12%. And your brain starts moving fast. What if it keeps dropping? What if this is the crash? What if I lose everything? You weren't thinking like this yesterday. Yesterday, everything felt fine. But today, everything feels fragile. That's how fast fear works. It doesn't ask permission. It doesn't wait for facts. It takes control. Now imagine something else. Same person, different day. Your portfolio is up, way up. Green numbers, +5%, +11%, +18%. And now your brain says something different. This is just the beginning. What if it doubles? I should put more in. No hesitation, no caution, just momentum. That's greed, and it feels good. Here's the problem. Fear makes you sell too early. Greed makes you buy too late. And between those two decisions, money disappears. Most people don't notice this happening. They think, I just made a bad decision. But it's not one decision. It's a pattern, a cycle. It repeats quietly over years. And the cost isn't obvious in the moment. It shows up later, when you realize how much you could have had.
The first time it happens, it feels justified. You sell because you want to protect what's left. That sounds smart, responsible, but timing matters. And fear destroys timing, because fear focuses on what's happening now, not what usually happens next. Markets fall. That's normal. They always have. But fear doesn't care about history. Fear only sees the drop. So people sell. At the exact moment patience was required. Then comes the second mistake. The market stabilizes. Then, slowly, it rises again. But now something else takes over. Doubt. You don't buy back in, because now you're afraid again. Not of losing, but of being wrong. So you wait. And while you wait, prices climb. Eventually, something shifts. The news turns positive. Everyone starts talking about gains again. And that's when greed returns. Now it feels safe. Now it feels obvious. Now you buy. But the price is higher, much higher. This is how most people invest. Not based on strategy, based on emotion. Buy high, sell low. Not because they want to, but because fear and greed decide for them. There's a moment most people don't talk about. It's not when you lose money. It's when you realize you were the reason you lost it. Not the market, not the timing. You. That moment is uncomfortable because it forces a different question. If emotions control my decisions, how many of them are actually mine? This is where things start to change. Not when you learn more about investing, but when you start observing yourself. You begin to notice patterns. You check your portfolio more often when it's dropping. You avoid it when it's falling too fast. You obsess over it when it's rising. Your behavior changes based on movement, not logic. That awareness is important because once you see it, you can't unsee it. There are two types of investors. Not rich versus poor, not experienced versus beginner, something deeper. Those who react and those who prepare. People who react wait for the market to move, then decide what to do. People who prepare decide in advance what they will do when it moves. That difference changes everything. Rule number 1.
If you don't control your emotions before the decision, they will control the decision for you. Preparation sounds simple, but it's uncomfortable because it forces you to face scenarios you don't like. What if the market drops 20%? What if everything I bought goes down? Most people avoid these thoughts, but avoiding them doesn't prevent them. It just makes you unprepared when they happen. So instead, you define your rules early, before emotion shows up. For example, if this drops 20%, I will not sell. Not because you're stubborn, because you already decided. Or if this rises too fast, I will not chase it, because you understand momentum can reverse. These rules feel unnecessary until the moment you need them, because when fear hits, you won't be thinking clearly, and when greed hits, you won't be cautious. Discipline is not about being strong in the moment. It's about removing the need to be strong. There's another layer most people miss: time. Fear and greed are powerful in the short term, but over time, they become weaker because time changes perspective. A one-day drop feels catastrophic. A 5-year chart makes it look small. Long-term investors understand this. They don't ignore fear. They just zoom out. When you zoom out, you see patterns, growth, recovery, cycles. You realize something important. The market doesn't move in straight lines. It moves in waves. Fear lives in the dips. Greed lives at the peaks. And most people live inside those extremes. But wealth is built in the middle, in consistency, in patience, in decisions that don't feel exciting. There's a reason long-term investing works, not because it's easy, because it avoids emotional decisions. You don't need to predict the market. You don't need perfect timing. You need consistency. Small decisions, repeated over time, without emotional interference. That sounds simple, but it's not easy, because emotions don't disappear. They evolve. Even experienced investors feel fear. They feel greed. The difference is, they don't act on it immediately. They pause. They check their rules. They follow their system. That pause is where control exists. Without it, every decision becomes reactive, and reactive decisions are expensive. There's something else. Fear and greed don't just affect investing. They affect spending, saving, opportunity. Fear says, don't take the risk. Greed says, take too much risk. And most people swing between both, too cautious or too aggressive, rarely balanced. Balance is not natural. It's trained. You train it by slowing down decisions, by questioning your own reactions, by asking, am I thinking or reacting? That question alone can save you thousands, because the biggest financial mistakes rarely come from lack of knowledge. They come from emotional decisions made quickly. Impulse, panic, excitement, all temporary feelings with permanent financial consequences. There's a shift that happens over time. You stop asking, what should I invest in? And start asking, how do I make better decisions? That shift is everything, because better decisions create better outcomes, even with imperfect investments. You don't need to be right every time. You just need to avoid being wrong in predictable ways. And fear and greed are predictable. They will show up again and again, in different forms, at different times. The question is not if, it's when. And when they do, what will you do? Will you follow the feeling or the plan? Because in that one decision can change years of progress.
Most people don't lose money all at once. They lose it slowly, through small emotional decisions stacked over time. And most people don't build wealth quickly. They build it quietly, through controlled decisions repeated over time. Same system, different behavior, different outcome. So the real question isn't, how do I make more money? It's, can I control myself when it matters most? Because if you can, everything changes. You don't panic sell.
You don't chase hype. You don't react to noise. You move differently. You think differently. And over time, your results look different too. If this made you pause, even for a second, don't ignore that. That awareness matters. Subscribe to the channel, because here we don't just talk about money, we break down how people actually think about it. Now I want to hear from you. When was the last time you made a financial decision based on emotion, not logic? Be honest. Write it in the comments, because recognizing it is the first step to changing it.